Hello, Happy New Year, and welcome back to the channel. In this edition, we'll be reviewing one of the hospital stocks. I believe hospital is going to be at the forefront of creating a lot of wealth in terms of the stock market. We know that India is currently a very young country with a median age of around 28. But as that median age approaches towards where China is, or it becomes a more mature market for healthcare services, there will be more footfalls within the hospitals, and that is something which I wanted to discuss and discuss Medanta. Medanta as a brand is at the forefront of hospital technological advancements. And I really wanted to bring forward some of the points that were discussed within the investor presentation in Q2 and H1 of FY 2025, and some of the finer details and the expansion that they are doing. So we will be starting off with the performance summary. We'll also look at how medical tourism is becoming very important, and the bed additions that Medanta has made. What are the expansion plans? How fast are they looking at expanding? What is the net cash flow positions? What is the debt position? Also be looking at the business updates, some of the key critical technologies that they've added. We'll be looking at their clinical achievements, key operating metrics, revenue mix, performance summary, value add, the new Noida hospital that they're opening, the Pitampura hospital that they're opening, clinics that they're getting into, also guest houses that they're building in and around the Gurgaon facility, and also the growth journey, what the growth journey has been. So let's dive right in. So here, in terms of the Q2 numbers, we can see that within the total income, they've had an increase of 13% compared to last Q2 of FY 2024. And what this number means is this: there's a 974 crore of total income that they have generated from the earlier 864 crore that they had earlier. So that's been a 13% jump. Within the EBITDA and margins, their earning before interest and tax has been 246 crores. So they have a margin of 25.3% on the EBITDA front, which has grown 6%. And within the PAT, they have had a profit within the quarter of 130 crore, which translates to a margin of 13.4%. And that has seen a 5% uptick from the last quarter. Then we look at the occupied bed days. Occupied bed days is nothing but the bed available for inpatient multiplied by the number of days that they have been occupied by. And we see that there's been a 9% uptick, although these have remained quite stable. But as the country begins to age, and as the more and more footfalls increase in the hospital, this should increase, and the occupancy rates within the hospital should would be very high. When we look at ARPOB, this is a term which is used to analyze hospital stocks, and this means average revenue per occupied bed. On that, they have mentioned an asterisk, which means that it excludes pharmacy and other income divided by the occupied bed days, and the average revenue per occupied bed has been in the 62,000 range. Medanta, as we know, was founded by Mr. Naresh Trehan, who's a cardiovascular and cardiothoracic surgeon. He is also the chairman and MD. So, given that the hospital specializes in heart surgeries, and a major chunk of their revenue comes from cardiovascular services, the average revenue per occupied bed will be higher for Medanta compared to some of the other brand names that are there within the hospital space, which do not have a cardiovascular as one of their main functions. Now, ALO is nothing but the average length of stay. So this is in the range of 3.2. So this would have declined if you look at it historically, because of advanced technologies that are coming in within heart surgeries. What is happening is there are a lot of non-invasive technologies that are being developed where the recovery time is faster. So because of that, if it's open heart surgery, the time to recovery will be higher. But if there has been a non-invasive procedure, then the average length of stay will also be lower. Also, in terms of cancer treatment, what is happening is they have developed radiotherapy. Earlier, what used to happen was that the radiotherapy would be given on the entire body, but now they have developed technologies to attack the cells exactly where the tumor is, and because of which the exposure to radiation is lesser per person, and it can be targeted singularly to the tumor. So because of these things and advancement of technology, average length of stay will continue going downwards, but the average cost of those treatment will continue going higher. In terms of the patient footfalls, what we see is that there has been a 9% uptick since Q2 FY24. There has been 45,169 inpatients. And in terms of the outpatients, there has been 775, 395 outpatients. So here we look at some of the key finer details of the Q2 FY 2025 performance summary. We looked at these numbers in terms of the financials. One thing that I wanted to highlight is they have added 52 beds within their Lucknow hospital and 66 beds at the Patna facility. The hospital numbers, Medanta hospital numbers, are really divided into two chunks. One is the matured ones, matured hospitals, and one is the non-matured hospitals. The way it's broken down is that the matured hospitals are considered over 6 year hospitals are considered matured hospitals. And within that, Indore, Ranchi, and Gurgaon fall. Gurgaon being the first one, Gurgaon Medanta Medicity. And then after that, so Ranchi and Indore fall within the mature hospital categories. And there are more additional hospitals which are coming up because of the sheer demand in quality healthcare. So here also what I wanted to highlight was so here average revenue per occupied bed marginally grew by 1.9% to 62,140. Inpatient count increased by 8.8%. During the quarter, okay, 52 beds were added. Yeah, so here this is what I was talking about, matured hospitals. So matured hospitals revenue was 6,882 million or 688 crore INR out of the 974 total income. So um, 60 almost 60 to 70% of the revenue is coming from the matured hospitals, and 30% revenue is coming now from the upcoming hospitals, uh, the other upcoming hospital like Lucknow and Patna as well. So these hospitals are beginning to contribute in a major manner because within these smaller cities the quality of healthcare, the standard would be low. So if a good hospital with high quality does come in, there are a lot of footfall which would fall through within smaller cities, and because of which we can see that they are already beginning to contribute close to 20 to 25% of the revenue or the total income of the hospitals. So in terms of the international patients revenue, this is what I was talking about. So medical tourism is going to be one of the biggest themes in India, uh, highlighted by many reports which are published in the medical fraternity. And so Medanta Medicity was able to cater to 51 crore worth of international patients revenue. Outpatient pharmacy continues to register strong growth. Revenue increased by 25% from 29 crore million in Q2 to 37 crore in Q2 of FY25. So in terms of the capacity expansion, within the Q2, we had 118 total beds, including 92 census beds, which were added during the quarter. Not too sure what the census beds is. Please do add within the comment section if you have any idea what census beds is, which would be really helpful for our community to understand this. So 66 beds are added at Patna and 52 beds are added at Lucknow. 73 ICU beds are operationalized in Q2 of FY25. It's also getting into an agreement with one of the brands to build a hospital in Pitampura, Delhi. And they have kept aside 600 crore worth of capital for that hospital, which would have 750 beds super specialty hospital once fully built up. Medanta is also getting into clinics. A lot of so if you see here, they have launched Medanta clinics at Gurugram and Ranchi. So this is not they're just not working with hospitals. They're also getting into clinics and trying to create a integrated chain of medical facilities. So within their Medanta Gurgaon facility, they're also building guest houses. So people who would be from out of station or would require longer term stays can avail of that facility. So these are some of the things that is happening. So here we can see that this is the Da Vinci Z robotic system that was operationalized at Gurugram in Q2 of 25. Now the Da Vinci Z robotic system is nothing but a robotic surgical system which is used to treat heart diseases, cardiac valve repair, and cancer of the cervix are some of the things that the Da Vinci Z robotic system operates, and it's also now operational within Lucknow. And this is what I was talking about, the high dose radio pharmaceutical therapy ward. Um, so this was the thing that I was mentioning, that instead of the person going through radiotherapy through the entire body, they can target specific cells or tumor in a specific manner and reduce the radiation exposure of the person. So these are some of the capability enhancement that they have been doing and which they mentioned within the investor presentation. So here they have quickly mentioned some of the clinical achievements that there are. So they've performed some CAR T cell therapy and advanced cancer treatment that harness the power of the patient's autoimmune system to fight cancer. They have completed Medanta Gurgaon and completed 3,000 kidney transplants. Medanta Lucknow has completed 100 breast cancer surgeries. Medanta Gurgaon doctors successfully performed bilateral lung transplants. So these here they have mentioned some of the typical operations that they have performed with the use of very able doctors and high tech technologies, which they have put in within their investor presentation. Here we are looking at some of the key operating metrics in terms of revenue and profitability. We can see that within Q2 of FY25, they generated total income of 974 crore, and which has seen a 12.7% CAGR increase from the 864.7 crore mentioned within Q2 of FY24. So a 12.7% increase. Within the EBITDA, they have seen a 5.5% increase from Q2 of FY24 to Q2 of FY25. Um, and the profit after tax has grown by 23.1% from Q1 FY25 to Q2 FY25. So average census and occupied beds. So the occupied beds have increased at a 9.1% CAGR, 9.1% rate, and census beds have increased by 10% since Q2 of FY24. Average length of stay pretty much stable, 3.19, 3.05, and 3.20 coming in for Q2 of FY25. Inpatient volumes have grown by 8.8%, also because of the addition of new beds and new hospital facilities that have opened up. So this has increased to 45,000. And OPD volumes have increased by 6.6%, which are in the range of 7,75,000. Here as well, average revenue per occupied bed has been pretty stable in the sense that it's above 60,000, has grown by 1.9% since Q2 of 2024, but the number to look at is 62,140. So that is the average rent per occupied bed. In terms of the IPD revenue mix, if you see how are they getting their cash? So cash comprises 61% or 57% of Q2 FY25. TPA 25%. So health insurance also going to be a big part. I think with the way US is right now, that medical inflation in India itself is around 14%, and how the US structure is. So for example, the US structure really um, because there is health insurance, the revenue goes on rising for these hospitals. And hence, I also foresee that happening in India, that given the fact that there is health insurance, a lot of people would not compromise on quality and would go for the best healthcare services. And this would be a reality, provided that the settlement ratios of the health insurance companies are kept in check. Because what I was reading was a lot of the claims are being rejected. And although the government charges 18% GST on medical insurance premiums, but there has been no actionable foresight from them in terms of dealing with health insurance rejections. Although there has been a lot of effort being made by IRDA, and what they have said is they've come out with a so if a person does pay a 5-year premium continuously, then a health claim cannot be rejected on the grounds of non-disclosure. It can only be rejected on the grounds of fraud. So the trick is to get in early and keep paying your premiums and hope that the health insurance companies then go out and settle the claims because some of the key updates that have happened within IRDA is that within a particular span of time, if you do pay your insurance premiums, then you would be getting your claim unless the company does can prove that it is a fraudulent claim. In terms of IPT versus OPD, obviously, IPD inpatient would be higher because of all the treatments that there is, high value treatments, and it's 83% to 17% for OPD IPD mix, and domestic international mix is 94.6%, and it's consistent from Q2 FY24 to Q2 FY25, but this should see an uptick, and there should be more of international revenue, which would be contributing to the bottom line. Here we look at the contribution from complex specialties and what is the revenue mix from that. So Heart contributed 21% of the overall revenue of 8983 million. So this revenue or the total income number is less than what we saw of 970 crore for the quarter because this does not have pharmacy revenue and other income. And this is the revenue purely from hospital services and services related to operation and inpatient and those kind of things. So heart contributed 21% and digestive 12%, cancer 14%, and neuro 12%. So these are the major chunks. These are the major 3 to 4 items that contribute majorly to the revenue mix of the hospital. And this is how it is placed. So here we look at the split between matured hospitals and developing hospitals. So the developing hospitals, the total income has grown by 4.2%. The EBITDA has gone down in terms of close to 823%, and it has an EBITDA margin of close to 29.9%. So what we can see that in comparison to the matured hospitals, the EBITDA margin is better by close to 4%, and that is how currently it's placed. In terms of average revenue, so in terms of occupied bed days, so 67% was the occupied bed days for matured hospital, whereas 60% was the occupied bed days for developing hospitals. So here we look at the gross debt. So the gross debt, um, there has been a repayment of debt. Earlier in FY 2023, the debt was close to 842 crore, but in FY of 2024, it has reduced to 419 crore. In the H1 of FY 2025, it has further reduced to 301 crore. And in terms of the cash and cash equivalents, there has been some capacity expansion and capital expansion, because of which there has been a reduction in cash and cash equivalents. But the cash and cash equivalents, very healthy cash and cash equivalents, so 10,205 crore. In terms of market capitalization, the entire hospital currently is worth close to 30,000 crore, and they have a cash and cash equivalents of 10,000 crore. So cash and cash equivalent is one third of the market capitalization. In terms of net debt and cash, they are positive, and they have a net cash of 7,186 crore. That is close to one fourth. So 25% of the market cap is in net debt or net cash. In terms of the total equity, they have, yeah, so net cash flow from operation, debt repayment of, yeah. So here we look at some of the areas. So in terms of bed expansion, attracting best talents, enhancing capabilities, and technological advancement. Mr. Naresh Trehan himself has studied from the US, and he, in a lot of his interviews, he talks about making India as advanced as the US in terms of some of the technology that they adopt. He talks about Hopkins and some of the medical facilities within the US, and try to emulate as much as possible um, the the facilities that they have, or the technological advancements that they have, or how they approach a particular um, treatment. So this is the Noida facility we were talking about. Noida facilities. Uh, so the 97% of the superstructure is complete. It's opening up in Sector 50. It'll be close to 550 beds. It is expected to open by Q1 of FY26. And this will add to further to the revenue and the growth prospects of Medanta, the Medicity. This is the Pitampura hospital we're talking about. So 750 bed in partnership with society. It's an operation and management contract that they have signed. 7 acre or 7.6 lakh square feet. Um, site in Pitampura. The hospital is to be jointly built by Medanta and society over the next 4 years, and Medanta is expected to incur a project capex of close to 600 crore. This is another of the expansionary plans. So this is the Medanta. Medanta is to enter the Mumbai market with a state-of-the-art 500 plus bedded super specialty hospital at Oshiwada. The company has bought 8859 square meters of land. And yeah, these are some of the things that they're getting into. They also get entering South Delhi, and they have a plan of 400 bed super specialty, and uh, and they are also getting into an asset light hospital partnership within Indore. Um, Site has been identified in prominent location MR10 road. They also have, as I mentioned, ventured into the Medanta clinic, and they have now two clinics, one in Gurgaon and one in Ranchi. So the majority of the things that they're going to do is pathology and radiology, and these are the diagnostics that they're going to carry out within the clinics. They also have plans of opening up a Medanta Medical College and also a Medanta guest house, as we mentioned earlier. And this is the total capex plan till the next 5 years. They have a total capex plan of close to 3,600 crore, which should be very comfortable given that the net cash position after reduction of debt is close to 7,000 crore. And this includes all of the plans in the future. So the Pitampura Hospital, the Mumbai Hospital, Indore and South Delhi Hospital, the medical school will incur close to 300 crore worth of debt, and the guest house will incur 250 crore worth of debt. So Mumbai Hospital will incur 1,000 crore, Indore 150 crore, and South Delhi DLF close to 300 crore, and Noida Hospital will incur a capex of 500 crore. This is the journey of the hospital. So as we can see that within 2022 they got listed and the IPO did come out.